tell me it's scheduled again. Do not tell me it's scheduled again. Ah, perfect. I'm live. Good morning. I started a Substack. Substack. I started a Substack. Say that like 10 times. That's a tongue twister. But started a Substack. It is just the podcast right now, but I plan on doing a newsletter with the charts that I show every day. So if you don't want to tune into YouTube Live every morning, this will be a way for you to see the charts if you want to listen to the podcast in your car or something of that sort. Just something a little bit different. I want to take a look at Shopify. I mean, let's take a look at, we're going to go over to TrendSpider. I altered, those of you with TrendSpider subscriptions that subscribe to my, here, I will share this, share scanner. This is the scanner that I use. So if you have a TrendSpider subscription, why is that not going in there? Oh, it did go in there. I will pin this up top. And that is the scan that I'm going to go over right now. In fact, let's see, brokerage holdings. It may get multiple. Oh, hold on. I got to get the dog to bed. I know. Do you want your bed? Here I come. I'll get your bed. Put you in here. Paramount Global. Okay. Let me put in Paramount Global into my notes as well. Opportunity. Still like Netflix. Okay. We're gonna do scans. So yeah, this scanner that I use is basically just, it's a MACD cross up. It looks at several candles, and the current candle. So we will say QCLN, CRWD. I hope the dogs aren't crying still. I got my headphones on so I can't hear a lot. But RBLX. We'll go to energy names. Arch has a cross up. Zephan asked me about Arch yesterday. Interesting. Energy names. We'll go to levered ETFs. SFIXI. Remember, I'll say Devon under 60. SVXY. Let me go to the strategy tester. This is my algorithm, the 4-hour one. I think this one, yeah, it's got a cross up. It's a secondary cross up. Okay. Secondary cross up. So it's not. Or that's CrowdStrike. Let's go to SVXY. 65, 67. This is the VIX. This is the short on the VIX. The VIX has not been, I mean, the VIX right now is at 18. It was at 20. This is what's crazy is SVXY has just had this monster run since October. 27%. You don't get 27% in the short VIX. That's crazy. But it is what it is. Levered ETFs. Then we go to low cost Vanguard. We've got VIG, VOT. I got a lot of scans here. Spider sectors. And I think it's because I changed the scan yesterday. I tested it. Seems like it works pretty well. It gets a few more included. Wow, that's a nice chart right there. But that's definitely is that a secondary cross up or another? No, it's a secondary one. I'm not going to include that one. PDD. Chewy. Wow, that's a nice move. 33. Plug power. Finally getting over the 200 day. So the price to earnings here, go to Investopedia, and I don't know that you have it price to earnings. There's the PE ratio, formula meaning examples. You can read about it here, okay? The share price is simply, morning Zephin. The share price is simply, and Investopedia, by the way, Brian, is that should be your Bible. I mean, that's essentially explains everything. But the share price is simply how much of the company. So say a company's valuation is $100,000, and they want to spin off half of that. So the public gets $50,000 of shares. It's based on the valuation of the company, and it's at the time that the company is distributing stock. So the public gets $50,000 worth of shares. They price it at $1 per share. That's 50,000 shares. That's kind of the dummied down version of how it works. I mean, that's as simple as I can say it. Now, say that company grows to be worth $200,000. That $1 share of 50,000 portion of the company actually is 100,000. The 50,000 shares are suddenly now worth $2. And yeah, so the way PE works is here. If you go to FinViz, like BRCC, this one's not making money. This is the coffee company. They're not making money. What you can do is you can go into this. This is a heat map of the S&P, and you can see the size of each one of these is basically the market cap, and they're broken down by segments, consumer, defensive. And I'll probably go. I was thinking about doing a video just going over all of this stuff too. But you can go in here and say you want to invest in GE. So you click on GE. GE. Okay. They have a PE of 159. Well, let's go and look at Honeywell, because Honeywell is in their same segment. They have a PE of 27. GE's expensive. Now, maybe their earnings are growing and that 159 actually comes down. The forward PE is 24.69. So their expectation is that the earnings are going to grow significantly. Honeywell's forward PE is 20. So, you can kind of base that judgment. Smaller PEs are called value stocks. And value stocks, if you want to take a look at the screener, you can basically just go and look at value stocks, PEs that are lower PEs. Like here, Apple, 26 PE, forward PE of 23. They're up 19% year to date, blah, blah, blah. Yeah, you're right in asking, Brian, but Investopedia is your best place to look for definitions. Kind of one of the questions I think last night was, well, how do I, in our private Facebook group, and if you want to join the Facebook group, it's in the link tree down below with the Facebook logo. And I said, he was like, okay, how do I find stocks? How do I look at this stuff? How do I use FinViz? Well, I said, just pull up your favorite stock and look at this gray box. And, if you hover over these things, it comes up with all of the description. You can't click on it. It doesn't give you. But go over to Investopedia.com and just type in that description, and it'll give you all of the meaning behind it. And then what you do is you go into your heat map or find other companies in that segment, and you try and find out, is it a good value? That's 100% how Warren Buffett actually invests. I mean, 100%. That's all he does. Now he's got a lot more information. He's got a terminal, like a Bloomberg terminal. That's why guys pay like $50,000 for a freaking Bloomberg terminal, is because it includes all of that information at the basically just the one screen. But it's the right place to ask it. Lemonade, I've owned that in the past. I'm doing my scans. Wow, Lowe's crossed up. QuantumScape, it's down 13%. Twilio crossed up. Upstart crossed up. Are you looking at BAM, or are you just saying BAM like Bam Bam? I don't know which one's effing. Let's look at all the ARK holdings. I think this is, I may have it. Wow, there were a lot of ARK holdings, and this may be a little bit too wide of a. Maybe I don't want to include 5. Let's see. BAM. What is it? BAM. Brookfield Asset Management. Is this a REIT asset management? Oh, it's a Canadian one. High PE. Up 24% year to date. It's brand new. Initiated coverage $35. What's it trading at? $35.64. Initiated coverage 35. It's got a 3.59%. They are. It sounds like the one thing I know about stuff about being They are funding renewable energy in Canada. And I think I've read about this one. They are backed, if I'm not mistaken, they are backed by public equity, I think. I mean, I could be 100% wrong on this. It's private equity business. Okay. It's essentially, it's a mortgage. It's a mortgage, and it's a conglomerate, asset management. They're basically buying assets like houses and mortgages and things of that sort, and giving people loan. It looks like it's a Berkshire, kind of like a Berkshire. You can kind of think of it that way, I think. I think that's what their business is. I'm not buying it. It's weird because you look at this, 2020, but there's no 2020 chart. Let me look at BAM. There's nothing. Let's see. This has BAM in it. Motley Fool usually explains what the hell BAM is. Brookfield. Asset managers, yeah. It's like Blackstone, Brookfield. I guess it used to be BN. Now it's BAM. So I'm not going to go over that one, Zephin, just because it's confusing as hell. It doesn't even have a 200-day. It looks like it was just beaten down here in December to 27 and has risen to 35. But the insider sales here at 25 make me worry because look at the value. You're talking hundreds of millions of dollars by Oaktree and Brookfield, and they're just selling it. So I don't know what's going on there. It could. With the last two initiations in December being $35 and $37, and you're trading at that right now. I don't know when their earnings come out. Their earnings already came out. Their ex-dividend date is the 27th. Plus, you're dealing with a Canadian stock. I don't know if there's tax implications to that. It's weird. It's definitely weird. BN. What the hell is BN? Same thing. Yeah, BN, BAM. They're the same exact thing. It's all Brookfield. BAM may be a secondary kind of thing. This one doesn't have as high a dividend. It's 0.77. But the chart looks similar. It's interesting. This one has even less information. No insider sales or anything. But it's a Canadian stock. So, I hate owning foreign stocks. Personal opinion, hate it. Just hate it. It always seems to cause some type of tax trigger where Fidelity's got to give me some type of tax thing. I just don't like it. I don't like it at all. Interesting. Intel, Cat, Honeywell, JP Morgan. I will tell you today is going to be scan heavy. Scan heavy is going to be heavy. I changed the scanner. So I know a lot of you guys just logged in. The pinned message is the scanner that I use in TrendSpider. So if you're in TrendSpider, you can use that one. I changed it. I wasn't happy with the results because I thought I was missing some results. And so I changed it. You can see if you log into TrendSpider, you can see what I changed it to. I'm going to tweak it even more. And that is interesting. Rivian crossed up. But I hate that chart. Now, that's just overvalued. Their earnings are coming up February 28th. But boy, this stock has run from 16 to 21. That 50 days moving positive. I'll bring it up. RIVN. Dawson, nice trade. It's at 35. That's a good one. Micron is at 61 with a cross up. That one could be an interesting one. I like Micron. Enphase. I like this. I like it down there. Solar's going to get a pop again. And Honeywell, I think I put this in here. No, I haven't. I'm going to put it in. Okay, we're going to go to... And with the new scan, I am dreading the energy sector. That sector is going to come up with, holy crap. Oh, I don't want the S&P 500. I want the S&P 100. I don't like trading the 500. I just want 100. There we go. I do have Boyle in the mix to look at. In fact, let me see what it's doing. I was looking at Shopify. We'll probably buy Shopify today. If it does get confirmation, I want to see how it opens. Boyle was under 6 yesterday and in pre-market, and it has bumped up. So if you didn't get it under 6, boo-hoo. If you got it under 6, like I said, you are now up, 5%. It should be interesting, but man, this thing's taking forever, and I think it's because of the way I have the scan going. Pre-market movers, AXLA, NEXI, boxed. This one's up 36%. Next Immune is up 56%. It's crazy. It's crazy how much you can actually find. Oh, man. Come on. I think a lot of people start logging in at 8:30. I'm looking to see. Exxon's up. Walmart's up. Shopify's down. God, I should have sold some of my Shopify, but oh well. There isn't much that's up. There we go. We got Intel, EMR, Emerson Electric. Some of the, by the way, Southern Company beat on earnings. Good earnings today. Lowe's, Honeywell. I'm not bringing up Lowe's. JP Morgan. GE had a cross up. This has just been a monster. GE's been crazy. Shitty Bank. I'm going to bring up Shitty Bank. That one has slowly been making a move. Booking. Cat. text from somebody. I guess not. I do have a text from somebody. It says I want. Oh, there it is. There it is. And we're going to close that down. Cat crossed up. Interesting. Let's go to the energy sector. Because of this new scan, man, this thing is probably going to put up 1,000 names for me in a sector like this. Google's at 96. Baltimore at 95. Boom, boom, boom. Microsoft 266. That's down a little bit. Snowflake's at 171. Wells Fargo. This has been a good buy for me. Hopefully some folks followed me into Wells Fargo. You're seeing a little bit. I may sell it based on this little button hook here at 47. Wait for it to come back down again. I haven't filled my entire position in here, but I may take some profits. Been a good trade. I think I bought 41.50 down here. Didn't bottom it out. Didn't time the bottom. Bottom was down here around 40. Back in December, but right before earnings, I said 41.50. It's a good opportunity, good chance. Rolled the dice. Good earnings. Got the dividend. 9 Energy. We went over that one yesterday. It was down a little bit. NRP, Natural Resources Partners. I don't see anything in here. Arch, I went over. That's up 1.66% with the earnings. Zephyr, I think you said you were in Arch. Zephyr did well. 1.66. Hopefully it did well. I mean, it's been in a slide since January. Yeah, LNG. So here's what you have to know about LNG. It's in this. Here, we'll go over to the strategy tester so we can look at the 4-hour algo. LNG, you have 151. I've said this many times. LNG, below 150, buy it at below 150. Sell it when it's above. You have your earnings coming up on February 22nd. You know what? I'll add this to my boil. I'll add LNG and PXD because both have exposure to natural gas. And natural gas is what's bringing a lot of this down. Devon, in fact, I think the natural gas is what brought down Devon. I don't think it's oil. It definitely was an issue, and the futures just crashed. PPI came in higher, producer price index, which means inflation is still around. So Boeing, I was actually looking at. It's interesting that you bring that up. We have an insider at Boeing. We have a listener who has a significant knowledge of inside Boeing's operations. And the message I got, you know what? I'll bring that up. Message I got was be very careful and don't hold it. Hold based on inventories and operations. So essentially, they have a graveyard of planes. Right now, it looks like it's a green candle in the afternoon yesterday. You're still above that 9-day. Let's go over and let's look at Active Trader Pro, and we'll look at Boeing. That's Boyle, by the way. Let's look at Boeing. So Boeing, right here, yesterday, it was just, it was choppy. Yesterday, I think the whole market was choppy. This was where they announced something. I don't know. That was like Tuesday. I think that was their earnings day or something. Or they announced the deal with Air India. This is trading at 215, right about where I bought it. I typically, with weekly stock picks, I will start looking on today to get out. If I wind up losing too much, I'll get out. Now, mind you, weekly stock picks, I don't put a lot of money into that. I bought one share of Boeing. Just full disclosure, one share. So if I go from 215 down to 213, I'm losing $2. Still hurts to lose, but I'm losing $2. The reason why I bought one share was this. Look at that run. I mean, that run from October from 129 to 214, it's justified. It was just too cheap back here for the explosion in travel. And honest to God, when they implement the dividend again, when they re-implement the dividend, remember COVID, they took the dividend out and they stopped the dividend because they were afraid of the actual company going bankrupt because they didn't have income. So they took the dividend out. The reason why I bought this was, hey, at 215, we had to buy at 214.46. And so I said, the algorithm still has me in. He says it's a weekly chart. I'll buy in. I bought one share. Today is typically the day that I'll start looking at, hey, should I get out? Specifically on this run. But if you look at the just the today's kind of view, and it doesn't trade very well in pre-market. I mean, we can look at a 5-day here. See how it just chops around in pre-market? It just chops. I mean, look at this. It went down, and then you got the news, and boom, it shot back up. This one was going up, went down on open. It shot right back up. So Lord knows where it's going to go. The market is taking a hit right now. January PPI came in hotter than expected, which means inflation. I'll start out the show with that. Hotter than expected, which means inflation still around. Okay, let me start the podcast. It's 8:40. Boom, 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 boom. I got my notes. I got this. I'm going to go over to Safari. We're going to start on SPY. That was Monday. Dude, we've had all green candles this week. That's an interesting one. Good morning. It's Thursday, February 16th. I'm looking at SPY. SPY right now, I was just noticing, we've had all green candles. So this is my algorithm in Trend Spider, if you're watching. It's a 4-hour, each candle is 4 hours. So you have 2 candles per day. But every day this week, February 13th, right here, we opened at 408. We closed at 412 at 12:30 because it's a 4-hour candle. And then this one, next one, the afternoon candle, we opened at 412. We closed at 412.40. We closed at 412.82. It's all green candles. So it's above the 9-day. Still have confirmation. 50-day is still moving up. One of the things that I wanted to bring up specifically with SPY, is that February, and I just noticed this, honest to God, yesterday. This is on the daily, and there are a lot of technicians that look at the daily on SPY and say, we had a golden cross on February 2nd. It's good news. It's real good news. If you bring this back to the volume levels and you say, you know what, I want to see where we're holding from the end of the year till today, there's a significant volume shelf here between 409 and 414. That is the key right there. I was listening to some technicians, and they said 3,500, which would be 350, which is way down here. It's still relevant. That's the October lows. We need to see closing and holding above 422 to make this an official bull market that would turn around. You did have this golden cross, and you can see from a daily perspective, the last time we had a golden cross, I'm moving all the way back here. It was July 2020. We had a golden cross. And that lasted all the way until March 2022. And that's essentially when we started the huge downfall. Now, you came back. There were a couple of moments where you thought, oh, this one's going to move up. This one's going to go. You can see this is December all the way to January. We're well above the 200-day, which was where we spent most of 2020 and all of 2021. But again, from a SPY perspective, it looks really, really good right now. And usually, again, I called it yesterday that a lot of technicians were saying, hey, February 15th, that's going to be kind of the doomsday, and that's when we start to slide. I don't know what it is, but right now you've got some pretty good stuff. If we close above 422 for any point in time and you hold it, I think that's where you start to say, okay, 440 may be in the cards. Right now it's at 413. January PPI, here's the killer. January PPI came in hotter than expected. And PPI is the producer's price index. So that's what the cost of goods that producers sell. So it came in hotter. That typically means that inflation is still around, which will typically mean that the Fed will need to raise rates even more or hold them higher for longer, which means that the market's going to go down. It immediately took the futures down, blah, 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 all of what it is. News other, Charlie Munger talked yesterday, and he said some pretty crazy things, some fun things as well. One of the things that he was saying was Costco. He said Costco, he would never sell Costco. Now, Costco just got you out of in our algorithm at a 9% gain. It's been coming down, but again, it's moving back up. I say under 500, buy this one. Just buy it. It's got a decent dividend, nothing crazy, but under 500, you buy it. Over 500, I think you can sell it if you need to take profits. The 52-week range is between 406 and 612. You're right in the middle of that. You're 16% below your 52-week high. You're 25% above your 52-week low. So I do think that this 453 kind of gap here, 453 to 461, I think it comes into play if we dip under the 200. But that 200 days moving up, you just had this golden cross on February 7th. So again, Charlie Munger says, hey, he would never sell it. But realize he doesn't trade a lot either. He also said BYD, which is the Chinese car company, is beating Tesla in China. Now, Tesla is a large portion of their gains come in China. I don't think that BYD is the symbol BYD because BYD is Boyd Gaming. I don't know that that's the car company. Let me see. I don't think that's it. But BYD, yeah, this is a resorts company. But Tesla, if you want to go into the Chinese stock market, you can buy BYD probably. But Tesla, essentially you can consider the two. BYD is the Chevy versus Tesla, which is the luxury. Now, in my mind, Tesla's not a luxury vehicle by any stretch of the imagination. You buy Tesla for the tech. You don't buy it for the luxury. You buy a BMW, you buy a Mercedes, you buy a Lexus for the luxury. For the tech, you buy Tesla. But he said they are really, really beating Tesla in China. I don't know about that. I know that Tesla is shutting down their Shanghai plant. I know that Tesla right now, you've had green candles all week. You had one afternoon red candle on Monday afternoon, but you've had green candles and you're above the 9-day. You've got all the confirmation in the world. I do think you're trading right now at 210 in pre-market. It's down a little bit. Today might be a red candle if we continue downwards. But since you're opening down, you may get a green candle upwards if the market starts to come back. Right now, it looks like the Dow is expected to open down about 250. So it would be a big a big climb back. Your MACD is super high on this. Somebody asked me, what's a good entry point to Tesla? Long term, just buy it today. Short term, probably wait. I mean, this move from 119, you got all the way down to 101. I was waiting for it to go down to 85, which there's a gap there. It doesn't look like it's going to go down there. But Charlie Munger also said the valuations in China are significantly better than the valuations here in the States, meaning that there's more opportunity. He specifically mentioned BABA. I know that he's traded BABA before. Their earnings are coming up February 22nd. You can see the slide on BABA. We had a great move from December 29th all the way to January 31st. You can see the algorithm got you out. You could have gotten out at about 119, 120, which is a big move. The algorithm got you out with a 25% gain. This one is on the downside of the 9-day. The MACD is low. The RSI is at 38. It's probably coming to a buy. And if you think that BABA, again, China reopening, maybe they have some good news. February 22nd is the earnings. Might be on the way to doing that. Now, when there was somebody talking about the Charlie Munger stuff and Tesla, and he brought up Vail, which is a mining company that Tesla has in. It came with a cross up yesterday at 1705. This one's been a bit of a monster lately, moving all the way from 13 all the way up to about 18. You just got out of a 5% gain. Before that, it was an 11% gain. So you've moved quite a bit. Now, the MACD, you can see it's way down low. It's moving up. The RSI is at 46, and your earnings are coming up February 27th. So the question is it going to use the 200-day as a support level, or is it going to just go right through that support? I don't know. I mean, Vail, I don't think that they're making money. Let me see. They might be making money. They do. They have a low PE of 3. They have a dividend of 8.61. Year to date, they're only up 0.47, so they're not up huge. This one could be a pretty good opportunity in my mind. But Vail, their 52-week, by the way, their 52-week high is $20.77. You are 17% below that. Your 52-week low is 11. You're 46% above that. So you are moving towards the 52-week highs. Their forward PE is 6. Their PE is 3, so they are expected to grow earnings, expected to grow 284% in the year. Price to sales is 1.86. Their book value is $7.46. So their cash on hand is $1.11 per share. Their dividends $1.47. So take a look at it. But Vail came up. The other one that I noticed yesterday in my personal portfolio is SEDGE, SDGE, I think it is. SGDE. What? Solar Edge. SEDG. SEDG. I don't know why I continue. Dyslexia. It had a cross up yesterday at 341. It kind of took off. I always say, hey, this one under 300, you should buy it. Over 300, you should sell it. It had a cross up here at 341. I don't know that 100% that is a major buy, but I will tell you what I was noticing up here is this gap that goes to 364. It's 364 is a big move. So from 343 to 364, you could get that move and cover that gap. It's 52-week range, SEDG, Solar Edge. You are only 8% below your 52-week high of 375, and I think that's where that gap was. You're 80% above your 52-week low of 190. Year to date, you're up 21%. Performance for 1 year, you're up 38%. Remember, SPY was down last year. SPY is significantly down. So this has been an outperformer. I just saw right after its earnings, which were great, $2.86 a share, it just shot up. So you could see that one continue to move up. Earnings, Cisco reported earnings. It was up 10% in pre-market. Right now, it's up 3% in pre-market. It was all the way up, I think, 54, 55 in pre-market. You had a cross up at 47.79. I brought this up right before earnings, 47.79 yesterday. I thought the RSI was high. They're upping the dividend. It's just a boring, safe company. I brought this one up before as a perfect example as to the dot bomb happened and we kind of slid, and then it just moved and moved and moved, and you still haven't recovered completely from the year 2000, 23 years later. So, but it's a better company now. It's a better company now. ROKU beat on the top and bottom line. They have a cross up today at 63.50. 63.50 is the cross up. They are up at 67. 6.86% they are up. They were up like 15%. So the PPI is really bringing them down. They lost more money, but they predicted solid results and solid go forward. So their guidance was super, super good. This was one that I thought was going to be an interesting one. Turned out to be interesting. If you traded it, high five. High five. I don't know that I'd necessarily hold it, although I will tell you, you got the Golden Cross on February 9th. So it's an interesting one. You know, Kathy Woods loves this one. She's been buying it the entire way down. Just remember, a 50% loss needs a 100% gain in order to just recover. So take your lumps sometimes. Zillow Group, they reported a really, really good quarter. They were up 10%. They're up 4.59%. We had a cross up here at $46. I brought this one up. It was interesting because all of the cost has been taken out of the business. Solid beat on the top and bottom line. The guidance was weak, which makes the pop a little bit unusual, but they've said that they've taken all of their homes that they bought off the balance sheet, and they're seeing stabilization in the housing market. This is 100% the housing market. So if you want to bet on the housing market, the bull is DRN. DRN is the housing market. Now, our algorithm has you out of DRN with a 20% gain, but you did have this golden cross that happened on January 26th. I would say hold off until about 10. I think you'll get a little bit of cooling off. But at some point in time, I think you do go up to this $16 range if the housing market becomes hot again. We just don't have enough homes in this country. Common sense. It's just like oil. We don't have enough oil. But the government continues to manipulate oil. Now, what's interesting about DRN, the 4-hour algorithm, when it tells you to get in and out, it makes you 90% over 1,000 candles, which is 2 years. The actual asset, just buying and holding, you lose 14%. So there are some big, big moves in this one. It's a triple levered ETF, DRN. It's a bull. The opposite is DRV. You can play these two against each other. But with Zillow beating, I would expect the DRN to give us a pretty good pop and potential buy-in coming here. So DRN. Another one that beat, and I brought this up before when I was at Earthlink, TWLO. We use TWLO as a software for our IVR, and I love the product. I absolutely love TWLO software. I thought it was good. I thought it was good when I worked at Earthlink, and if we just look at a weekly on here, when I left Earthlink, which was January 2020, right about here, it was selling at 115. This stock went all the way to 378. And again, 115 was where it was selling. Now, if I bought it the day I left Earthlink at about 115, I went all the way down to 68. So I lost about 40% of my money. But if I had held on, I would have been all the way up here. Now, your boy most likely would have held on till about here. And I'd be celebrating today with a nice move up to 66, but I'd still be holding at 115. So this kind of points out when you're not making money and you have these companies and you have these big guidance and stuff, sometimes it makes sense to just trade. Don't hold and buy and hold. Even if you believe in the company, if the company is not making money, then just, trade it. Twilio is not making money. The forward PE is 400. They have to grow in. Year to date, you're up 34%. Sorry, for the year, you're down 66%. You're right in the middle of your 52-week range. But I like Twilio. I really like the software. Ryan on YouTube wanted me to take a look at LAT and TLT. These are... Is it LAT? LGT. I think it's LGT. Let me look real quick. We'll go to YouTube and I'll go to my comment section. God, I wish this was faster. Let me see. It is. There we do. Ryan. LQD. LQD. LQD and TLT. Now, here's what I'll tell you, Ryan, about bond funds. I am not an expert on bonds. I don't understand bonds. My 35, 40-year career in investing, I have not been a fan of bonds. Bonds have been horrific. Last year was the first year where a 60-40 portfolio actually underperformed a total equity portfolio. I called up Fidelity. And again, remember, Fidelity is a quality brokerage. It's not like you can call Robinhood and ask these questions. But you want a quality brokerage. And I called Fidelity and I said, tell me about bonds. They have a bond page. And I said, tell me about this. Several people who were on the phone. I am a high net worth client, so I get a bunch of people on the phone when I call them. So, and all three people on the phone said they considered now to be a once in a lifetime way to buy bonds. And the reason is, say for instance, you buy a 10-year bond at about 4% right now. Maybe it goes to 5%. And remember, the yields are inverted. So you're getting about 5% on a 2-year, 4 to 5% on a 2-year. You're getting between 3.5% and 4% on a 10-year. So they're inverted. You're getting paid more money to hold money for less time. That's not typical. That is usually the indication that we're heading into a recession, blah, 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 whatever. But say you buy these long-term bonds, and this is what they were telling me. The worst is you hold these bonds and you get paid 4 or 5% per year. That's not a horrible thing. Not a horrible thing whatsoever. But then say the Fed lowers rates and they go from 5% over the next year to 4.5%. But you've got this bond that is paying you 5.5% over the next 10, 15, 20 years, whatever length of bond that you have. Well, the bond's actual asset value will go up. And so you can sell that bond for more than you actually paid for it and have gotten paid 5% for a year or two. So it's a once-in-a-lifetime opportunity to buy bonds. That's what it was explained to me. Now, here's the difference. Bond funds like LQT and TLT, they constantly buy and sell bonds. So you're actually not making the money that you could. That's the way it's been explained to me. And if you look, as the interest rates have gone up, TLT has gone down. Now, if you think that all of a sudden TLT is going to go way up again, They said the way up is going to be even slower than the way down. The way down was quick because we raised rates so quickly from 0 to 5%, 4.5% in a year. 0 to 4.5% in a year. If you think we're going back to 0, this was where TLT was at 0. 167. Okay? That's where it was at 0%. 0% bonds. It was at 0. It was at 167. Now at 5%, you're down here. Doesn't make sense. So I'm not a fan of this. You could buy it. Bonds are used for fixed income. If you're under 40, you don't need fixed income. They're a safety mechanism. And yeah, John, if here's the difference, and do your research into this too. Treasury bills. There's a enormous difference between public and private bonds as well. You can buy public bonds, which treasury bills, which, if you get the right bonds, they may pay like 4 or 5%, but there's no taxes because they're treasury bills. So all of the 4 or 5%, you don't even have to pay taxes on that 4 or 5%. So there's definitely some things to do in research. I'm not a fan. Again, I've been told it's a once-in-a-lifetime opportunity to buy bonds. But bond funds, they specifically told me bond funds was not the way to go. So I can only go. I'm not a bond person. I am not somebody who's an expert. But I can tell you, just looking at this chart and thinking that this was where TLT, the 20-year Treasury bond ETF, was at 0. Do I think that we're going to 0 again? No. Do I think we're going back to 2% at some point in time? Probably. Where were we when we were at 2%? You were only up here at 120. So, if you want 20% over the next couple of years with a safety kind of valve, but again, this is a decaying asset. They take fees out of this stuff. Buy the bonds. It's kind of the way it's been. Sam from Facebook wants me to look at ORGN, Origin Materials. So let's take a look real quick. Ooh, it's a fun one. You had this buy at January 3rd at $4.59. It got you out with a 20% gain, but wow, you could have ridden it all the way to $6.20. You have your earnings coming up February 23rd. There is a nice kind of button hook that's happening right here. Let me pull this back to about here, and let's see where the volume shelf. You got a volume shelf is about $5. You're trading at a $5.11. It's $5.16 in the pre-market. My guess is it's not making money, but I will hold my horses and not assume. Origin Materials, they do have a PE of 1073. Year to date, they're up 11%. Credit Suisse initiated with a $7 price target, trading well below that at $5. Origin Materials produces and commercializes plant-based PET plastic. It develops a platform for turning the carbon found in biomass into useful materials while capturing carbon in the process. The company serves tire filler, carbon black, agriculture, and activated carbon markets. Origin Materials is based in West Sacramento, California. February 1st, there was a sale, $7,000. Nothing that stands out to me as huge. It does look like this guy sold 150,000 shares. He's co-CEO and director. That was back on December 27th at about $458. Maybe he was putting in a pool. I mean, again, it's $687,000. Chief Commercial Officer back on August 2nd at $6. I would say all of these sales come, other than this one, which is a big one at $4.58. Yeah, I would say, again, I think they're probably just putting in pools, taking out money, blah blah blah. You can read more about it. Fourth quarter release date and conference call, manufacturing plant, financing. It is a micro cap, I believe. Let me just see. ORGN. They have a market cap of 730 million. It's a micro cap. So I do see 1.5 million shares traded over 10 days, 901,000 over 90 days. So you do have some hype around this one. It looks like it's trading down a little bit in pre-market. I listen, anything that takes renewables and is taking carbon out and blah, 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 I'm a fan of. So I'm a fan of the company. But the price basically increased for the rest of the day. I mean, you can read some of the comments. It's definitely some green hammer on downtrend means trend reversal. I do see a reversal, and they are talking about a hammer. And a hammer is a basically green candle with a higher close. So the little hammer thing comes out to the right. But Origin, that might not be a bad thing. I like it. I don't know that I'd necessarily buy it. Again, I think you're kind of rolling the dice around earnings on this one. Their earnings have been positive, so it's not like they're not making money. But I would read around their expectations. You can see this one, August 3rd last year, when they announced their earnings, they went from essentially 5 to 7. The 52-week is between 418 and 771. The monkeys have them at about $7. That's the most recent one, and outperform, and that was in October. You're right in the middle of your 52-week range. There's nothing crazy about this, but the earnings, again, with a company so new, I think you're just rolling the dice on that one. But I don't think it's bad. Our algorithm, so you know, loses you 14% versus buying and holding the asset loses you 62%. So our algorithm outperforms. You win 27% of the time. Your average win is 12%. So this move from 459 up here to where you got out with a 20% gain, it outperformed. That's one of the larger ones, larger wins. But I do seem to think, I mean, it's broken through the 200-day, so it's down there. You did have this golden cross, but it didn't last. So the question is, it doesn't spend a lot of time above the 200-day. I mean, it definitely looks like that 200-day is providing just moves that it's hard to say. I mean, you can see the weekly. You're under the 50-day, and you're well under the 50-day. But as far as the weekly goes, this week has not been a good week for this stock. But great question. I think you can see how I kind of look at it. From the gray box and just kind of look at it and then go down here, look at the insider. You can read the articles as well. This stuff provides you some stuff as well, but FinViz typically hides a lot of this stuff. But that's just their books. But it's an interesting one. I like it. Let's take a look at natural gas, BOIL. And wow, I'm already half hour in. BOIL is one. Remember we said yesterday, hey, there might be an opportunity for natural gas to turn around because you're capitulating here. Yesterday's afternoon candle was red. It opened at 624. It closed at 602. I said under 6, you should absolutely 100% buy it. It is up 3% at 619. It did dip under 6. I think if you have an opportunity today, I think you get this under 6 because I do think it's capitulating. While the long term, and we go over this a lot, the long term does put this still in a downward trend. And it puts the bottom in at between 2 and 4. But I do think that you could look at this one. There was a question, too, about LNG and PXD. LNG is interesting because you've been capitulating. This is Cheniere Energy. And this was a big winner with the war in Ukraine. You can see back here, we'll go back a little bit more. I want to go back to March of last year, where the Ukrainian war kind of started. And you see in March is at 135, and it just kind of fluttered along. But then in July, they opened up basically a Louisiana plant and started shipping to Europe for the winter. And with the European rise in natural gas, they were able to take natural gas from the U.S. for $5 to $8 and sell it for around $500 to $800 in Europe. The stock price quickly went from about 128 to 169. You've kind of pulled back. You've got an ascending wedge right here. Boom. It looks interesting. I will tell you their earnings are coming up on February 22nd. The problem that you have is natural gas has just been hammered. So I don't expect them, what your grandmother cooks for Christmas, whether it's meatloaf or turkey, it's already priced in the market. We all know that. So the price of natural gas has been priced into this stock. The question is, how much have they actually spent? And I remember from looking at Cheniere Energy, there was a high amount of, a super high amount of capital that they had to spend. So the one that I think has less exposure and maybe better is PXD. This is Pioneer Natural Resources. This is one that they've covered this gap down here at about 219. You're trading at 220. Right now, it's kind of flat in pre-market. Their earnings are coming up February 22nd as well. The RSI is down at 39. I would expect this one, if we go and look at PXD, I think they have a PE of like 5 or 6, 7.88. So it's a little bit high, but their dividend is 11.8%. So even if you were to go down to the 52-week low, say you buy it at 220 here, and you were to go down to the 52-week low of 190 at some point this year, but then you were to come back at 220, you're 16% below that, you're getting an 11% dividend. So again, year to date, you're down 3%. Performance for 1 year, you're up 7%, which means 1 year performance, you've outperformed the S&P. Because if I just go to SPY, let's just see. SPY for 1 year, down 5%. So you're making money on PXD. So I think those two are good. Square, T-Drift on YouTube wanted me to look at Square. And this is Block. I mean, I still call it Square. I owned, I think I still do own a bunch of Square at a significantly higher price, as I do own PayPal at a significantly higher price. I've been slowly adding, we're talking 1 or 2 shares, not much. This one has had an incredible run from 61 all the way up to, we got out with a 28% gain here on February 10th. Your earnings are coming up February 23rd. The RSI is a little bit high. It's at 58. The MACD looks like it's going to cross up for a secondary run. You had this golden cross here on January 6th, which actually provided all the support for that run. If we pull this back here, you can kind of see this is a double top kind of right here at about 90. That's going to provide some resistance. That double top is going to say, hey, to get above 90, we have to have something incredible. The incredible thing might be that Bitcoin just crossed $24,000. Bitcoin trading is back. If these guys do some type of announcement about crypto, some type of announcement is something, I think you get a hype rally. If we pull this volume lever back here, we'll go back to the beginning of the double top. The majority of people look like they're holding on here at about 60. So again, that 200-day I think is going to be a magnet if this one gets, or the market is taken down. But right now in pre-market, it's down 2.65% at about 80. I would be looking at about, if you were to get in this one at 80, and again, the algorithm doesn't have us in, but it's probably going to get us in soon. If you were to look at getting in this one at 80, I would probably put a fairly tight stop loss at 76. That's about a 5% loss. But I would put that stop loss in there because I think this is going to provide you some support. If you break this, I think you go down to 64. So I would, if you were looking at this one to kind of trade T-Drift, I would probably put the stop loss in at about 76. 77. That just looks like it's the first volume shelf. If we break that one, I think you're going to go right through these volume shelves. I think you'll go down to this big volume shelf at 64. So this volume shelf right here seems to be building. If that one continues to build, I think we're good. Just my take on it, but usually a pretty good take. I posted yesterday a memory from February 15th, 2012. I was debating about whether to buy 1,250 shares of Bank of America. And this was 2012. So let's go back to 2012. So during that time, I could have bought Bank of America right here in February. Let's see. It was selling at $71. $71 was where it was selling. Today it's at, Bank of America. That's Boeing. Boeing would have made me a bunch of money too. But let's go to a weekly. Bank of America. Wow, Boeing. Whew. I'll get to Boeing in a little bit too because that's a weekly stock. This is going to be a long episode. But Bank of America 2012, you were selling at February. $8. Let's say $8. $8. You were selling at $8. Today that's worth $35. So you've what? 8 times 5 is 40. Say you've 5 times your number. You know, 4 and change, 450, 4.5 times, so 450%. That's 1,250 shares. I'd have made out pretty good. I believe I sold somewhere in this neighborhood. I did not hold on to 2016. I did not hold there. I sold somewhere in here. I never picked it back up. I was also, so we got 450% there. I was debating whether to buy that or Apple. So let's look at Apple 2012. We'll pull this back. And full disclosure, I think I bought both. Honest to God, I think I bought both. I just didn't sell the Apple. I still hold the Apple. February 2012, this was selling at, let's say 17. So 17, you have 10 times your money, 9 and change. So Apple was the better bet. Plain and simple, got questioned about that one. I bought both. I did not sell Apple. I did sell my Bank of America. I don't own Bank of America. Currently, the only ones that I own, I think I own JP Morgan, I own Morgan Stanley, and I own Wells Fargo. And Wells Fargo was purchased this year. So, again, if you're not in our private Facebook group, that was posted in our private Facebook group. I think I posted on Instagram as well. But it was an interesting one for me to look back on. Mara has been absolutely tearing it up. Bitcoin has been absolutely tearing it up. There are 4 that I currently look at, and Mara has a cross up on our 4-hour at $7.45. You're trading at $7.74. $7.45 was yesterday. So Mara, I think this one, the RSI is at 62. It's a little bit high, but that MACD is crossing up. If Bitcoin continues to rise and crypto continues to go, I think Mara might be a buy. At $7.45, their earnings are coming up on February 28th. I can't imagine that during the lows, these guys weren't mining extra and they're going to announce some crazy, crazy stuff. But again, this is a mining company. So you're actually buying something of value versus a GBTC, which is you're buying into the Bitcoin Trust, which is actually undervaluing their Bitcoin if they own that amount of Bitcoin. GBTC is a trust, so supposedly they have this big Bitcoin thing. There are some questions whether it's been liquidated or whatever, whether they actually have it. But you do have a cross up here at $12.17. Coinbase. There is some questions as to what is actually going on with Coinbase, but you're about to have a cross up here at about 66 is where it's trading right now. You will probably have a cross up of the MACD. The RSI is super, super high. Their earnings are coming up February 21st. They are said to be looking internationally. You do have a golden cross on February 9th. Here's the question. Is it a short squeeze? Because when we go over and we look at coin, short interest, 36 million shares. About 20% of the shares are shorted. It's a huge, huge amount. Now, they're regulated, so I don't think that they're going bankrupt. They constantly have to tell people they're not going bankrupt. But that is one that I think you could trade. The other one that I trade in the crypto space is ETHE. And we're going to cross up here at $7.87. They're all crossing up at about the same time. So you can take your pick. Again, it's Mara, GBTC, Coin, or Ethereum. And Bitcoin just crossed 2,400. Paramount Global, which is a Jim Lebenthal favorite, they just tanked their earnings. They're down at 23. We had this cross up at 24.57. You're down at $23. You're down 6% in the pre-market. You did have this golden cross. Their Paramount Global, the streaming service, gained a bunch, but their traditional services and their advertising just not doing so well. I think if this one gets down to this, we'll pull this back over here. Let's pull this and see where we're trading. There's this. $20, I think, is your shelf. If you get down to $20, I think you pull the trigger and buy this one. This $21 could be a support level. If you break through that, I think you're getting down to that $20.60 level. But Paramount went over. Devon Energy, we talked about their earnings. It's under 60. It's under 60. It got you out. The algorithm got you out. You're not in there. But the RSI is down at 34. Their ex-dividend date is coming up on March 14th. It's like an 8% dividend. So my guess is that they'll have some problems. I am currently holding. I'm probably just buying more. There was a question about Boeing because it's the weekly stock pick. I bought one share. Full disclosure, one share. So it is in this ascending triangle. You do have part of the reason why I bought it was you had in my algorithm, you had to buy in here at 214. I bought in at 215. Right now it's trading at 215.33. So I'm either flat or I've lost some money. Not much. We're talking pennies, not dollars. But the question is, do you hold this into tomorrow where it could, does it get brought back down today? Weekly stock pick likes to buy on Monday, sell on Friday, unless there's some big news or he has some stop loss. I think his stop losses are about 5%. He will email you if he gets out, but he will tell you what his results are from Monday to Friday. Again, I'm holding it. We do have a listener who has some inside information about Boeing and about some planes in basically a yard that they're refurbishing, and they're having some problems operationally with supply chain and blah, blah, blah. I think Boeing, again, whatever most people probably know this, that price the stock, that move the stock, that move it big. My assumption is that they had to disclose something about those warehouse things. I'm just not that close to this. But the person with the inside information kind of said, hey, just make sure you're not holding this one because you could get surprised to the downside. In my mind, this is a huge just buy and hold. And the only reason you're buying and holding is not because you think that this company is going to make a ton of money, not because you think that this company is going to, is run well. I think it's a horrible company. I think it's been run horribly over the last 2 to 3 years. You look at what they did to those poor passengers, that the two crashes of the 737 MAX, just all over the place. Just a bad company. The reason why you're holding this is if they reinstate the dividend, it's a $400 stock. Honest to God, if they reinstate the dividend, it's a $400 stock. You take a look at this and you look right before the pandemic, it's a $345. You go all the way up to $400 here back in 2019. So I think with the increase in travel, it's a $400 stock. Let's go over some scans. I did change the scanner tool. So if you're subscribed to TrendSpider and you're part of my scanning, I changed I'm customizing this. Essentially, it's going to pull up a ton more stocks. So this is going to be long. We're going over an hour today, but these are the ones for the scanner, and I wanted to go over it. QCLN, secondary scan, secondary cross-up, It's just got, you're getting the golden cross right here. I think this is a clean energy ETF. I personally hold this one. I hold it big. It's one to get you into clean energy. I like it. CrowdStrike, this is one that I don't have. And by the way, QCLN, it is in our core portfolio in daily stock picks. I have it in the core portfolio. CRWD, CrowdStrike, I don't have in the core portfolio, but I do personally own this one. This is secondary cross-up. The RSI is super, super high, but it's a secondary cross-up. The 50-day is finally moving positive. So you've got some positive momentum in this one. Roblox. We talked about Roblox with their earnings. This had a cross-up. It has a buy-in here at $44.50. That MACD is crossing up, but the RSI is at 73. I would be careful with this one because I think if we do get a market pullback, this one could be a big one. Arch Resources. They announced earnings, big, really good earnings. It's trading up 3% in pre-market to 151. Don't know the details, but their earnings per share, $23.18. Crazy earnings. There's a gap up here that might be getting filled. Again, it's 153, 151 is where it's trading right now. There's a gap up here to 162. You had the golden cross back here on January 24th. The golden cross didn't mean a lot because it actually came down from 158 down to the 146 where it told you to kind of get in yesterday. Should have gotten in before earnings, but oh well. But yeah, 151. With those earnings, I mean, is it crazy to think that you could probably be going back to some highs? Let's take a look at a longer arch. Arch is the symbol. Let's take a look at their 52-week range. 52-week range, you're setting new highs, 160. So their dividend is 0.68. They're up 50% for 1 year. 50% for 1 year. So I do like that one. It's an interesting one. But again, you're buying into like significant strength. One of our triple levered ETS, ex-VIXY. The VIX is at 18. I mean, I don't know when the last time the VIX was at 18, but it's been slowly going down. And you can see this buy-in here, October 14th at 49. It just got you out at 63. Well, it gets you back in at 65. You're trading at 65.20. If you want to trade this one, it is the short of the VIX. So as the VIX goes down, this particular ETF goes up. VIG, which is one of our Vanguard low cost. This is dividend appreciation. Has a buy-in at 157. The algorithm makes you 20% on this. Buying and holding makes you 10%. You win 36% of the time. Your average win is 4.73. I typically say, you know what? If you want a dividend, take a look at it. VIG is probably a good one to get into. Just don't trade it. I probably wouldn't trade it. VOT, which is the mid cap. This is a secondary cross up. We had a cross up back here, December 29th. You have a secondary cross up, about 200. The RSI is pretty high. I'd probably wait for it to come back down to the 50-day, but you've had to look at that mid cap. I mean, you had the golden cross here, January 17th. Boom. It's just shot up. It's just shot up a lot. One of our sectors, XLI, which is the spider sector for industrials. You've got this ascending wedge. You do have a gap down here. You have a little gap. That's the ascending wedge. You got out. This one had a crazy run from September 29th all the way to December 8th for a 20% gain. 20% gain. This is secondary cross-up. Your initial cross-up was at $100. You're at $102. It's not crazy. It's 2%. I mean, you're buying 2% higher. Now, here's what you have to know. XLI, as far as the 52-week goes, you're 1%. Your high is 105. So if you're buying in at 102, you're buying kind of at the highs. I'd probably wait. Particularly, I mean, still got this gap around 96. I don't know that you necessarily need to get in there. But XLI did have a cross-up. We talked about GBTC. We haven't talked about JP Morgan. JP Morgan had I believe it's a secondary cross-up. Yeah, 139 was the initial buy. Today at 143, you had a cross up. 143. The RSI is a little bit high. Again, you're buying into strength on this one. That's a super high one to buy into. ARKW, one of the ARK funds, had a cross up. It is a new cross up because it just got you out with a 30% gain. So this is a second cross up at $55. You had your golden cross here on February 3rd, where it immediately just took its way down. After that golden cross, you just saw it crash. Well, if you get in at 54 today, because it's down, it opened up down 1.89% at about $54. You can get it below what the algorithm says. So I like it. ARKW, I don't personally own it. Trading Desk, we talked about Trading Desk. My friend, a family friend, was the CFO. With earnings, man, it got you out right before earnings with a 10% gain. Boom, it gets you right back in at 62.53. 64.92 is where it's trading right now. The RSI is super high at 80. I don't know that I'd necessarily get into this one, but you do have a golden cross happening. And as far as your 52-week, the Trading Desk, your 52-week, you are 23% below your 52-week high of 86. You're 70% above your 52-week low of 39. So kudos to anybody that bought that at 39, anywhere down here at 44. You've covered this gap. That gap has been covered. You don't have to worry about that gap. The Bollinger Bands are wide open. You're up above that top Bollinger Band. The Trading Desk is one. We talked about the Ethereum. We haven't talked about Intel. Intel had a horrible, horrible quarter. You've got this gap up here between 29 and 30. You're trading today at 28. That could be a nice 10% move. 28.57 is the buy-in. You're trading at 28.49. I told my dad sell right about here. I told him to sell, and I said, I told him to sell at 30. I said, anytime you're at 30 on this one, sell. He sold it, didn't get the dividend. Sold right before the dividend, and then basically it just slid down, and it's starting to come back. So Intel has that golden cross, and it had the golden cross right after the earnings. Ironically, even with that gap, it basically sold it. The gap down is the dividend that you're seeing right there. And it'll cover it. It'll come back. It'll cover it. Caterpillar, which I am still holding on to from the weekly stock picks from 2 weeks ago, has just been in a steep decline. But it's got a new buy at 248. So you could fill this gap at 256. I'll probably add a couple of shares. I like that. 246 is where it's trading right now. I do like it. It's a good company to probably hold on to. It's a well-run company. Honeywell, HON, has a cross-up after a slide. And you haven't made money in the past couple of buys. The MACD, you can see it right here. It's just crossing, while the RSI is kind of sitting there. 201.73 is the buy-in. You're at 198. I probably wouldn't buy into this one. The algorithm loses you 14%. Buying and holding loses you 1% on this one. Honeywell's a good company. I like it, but again, I think you're getting to that 200-day. It's kind of you're going to use that as support. I think you're going to have the death cross of the 50-day. I think you trade under the 200-day. You do have the dividend X date coming up as a catalyst, February 23rd, but there's better places for your money, in my opinion. JP Morgan, we talked about. This one had a cross up. I think we talked about it. But JP Morgan, yeah, it's just up there. I actually have it twice on this list. Rivian, I was debating whether to put this one in. So Ford had a battery issue. This one has a cross up here at 21.15. The 50 days might finally moving positive. The 200 day is still in the negative territory. February 28th is their earnings. The question is going to be, how many cars have they been able to make, or how much money are they making on cars? With the Tesla reduction in price, have they seen any slide in margin? Are they going to be forced to reduce their price to compete with Tesla? I don't know. It's risky. And if you want to know, just go into FinViz and look at the valuation. They don't have a forward PE because they don't give PE. Their price to sales is 19. You go and look at their margins. Look at this. Initiated coverage, Barclays, $28. They're trading at $21, $20.43. Truist in January, buy. They have a $50 price rating. Cantor Fitzgerald initiated coverage at $22. So the price targets are all over the place. This company's not making money. Their year to date, they've made 14%. 1 year, they're down 66%. It was an overpriced asset when it was initiated. The price of the company was just overstated, and now they're having to get back in. MU, Micron. Micron is look at Micron. I mean, $50. I've talked about it. $50 was just an all-time great one in Micron. You got out with a 61% gain. You do have this gap here between 50 and 52. I don't know that I'd necessarily worry about it. I do think that this, if I bring this back, this gap was filled. If we go back to this gap, most people, I would say the support level is probably at 57 on this one. But Micron has a cross up. You are buying into some strength. You're 35% below your 52 week, 27% above your 52 week low. So you're buying into some there. Enphase Energy. This one has just, I mean, if you want to talk about a perfect setup, they've had their earnings. They were slightly disappointing, I believe. They made $1.51. It didn't shoot up. I mean, you had a big 12% candlestick on this one. Big move. The Bollinger Bands are cinching up. I think it's getting ready for a move. It is expensive. This is an expensive stock. Buying and holding this stock made you 18%. Using the algorithm loses you 12%. And the reason it loses you 12% is because sometimes you just miss out on the big gains. But 217.50 is the buy-in. Enphase here is the PE is 79. The forward PE is 30. Super expensive. Year to date down 17%, but over 1 year you're up 51%. So if we take a look at a long time version of this, you can clearly see it's just kind of moving down a little bit. Not a lot, just kind of flattening out, growing into its valuation. You can see the MACD is moving down. It hasn't started moving up. The RSI is at 40. In my mind, I think 212. Again, if you want to buy that one, I think it's a good opportunity. Honeywell, we talked about. The last one that I'm going to go over because it's an hour is our favorite South Park saying, Shitty Bank. 51.54. It just got you out with a 14% gain. This one has a secondary, another cross up. The RSI is a little bit high at 54. You had this golden cross down here at January 19th when the stock was trading about $46. I'm sorry, the stock was trading at about $49. That's when the golden cross happened. 51 is not crazy for this bank. It's not crazy for this bank. The valuation is there. It's a bank that's being turned around. The 52-week high is 67, so you're 23% below that. You're only 29% above your 52-week low of $40. I think $50 is my kind of mid-price. Under 50, buy this one. Over 50, I think you can sell it. But I think 51.54, you've got enough momentum here. You have nothing that's necessarily going to bring this down because you have a rising rates environment. And you have some positive momentum on that 200-day. If you look at the daily, I think we just got the golden cross. We're just getting the golden cross right now. So I do think you have an opportunity to get into Citibank. I'd probably time it a little bit, but I think Citibank is a good one. Okay, I went an hour. If you made it this far, hit the 5 stars. If you're on YouTube, hit the thumbs up button. Remember to subscribe on YouTube. If you made it this far, just go over to YouTube and hit subscribe. That's all I want. If you want to join our private Facebook group, it's in the link tree. You can just look for the Facebook logo. You can look for all my social logos up top. Join all of them, whatever you want. If you want to get in touch with me, you can get in touch with me there. But any questions, hit me up. Thanks, guys. See ya. Talk to you tomorrow. Okay, export song to disk. Bum, bum, bum. Hold on 1 second. Export. Okay. Now I got to read your comments. DRV. Zevin, are you in DRV? DRV is an interesting one. Algorithm got you in a couple of times. At $40, and you're up at 44. DRV's been good. This is the 3 times bear ETF. And yeah, Arch had crazy earnings. Morning, Justin. When you say long-term on your daily stock picks, what do you consider long-term, week, month, year? Depends on the stock, Brian. I usually will give you kind of a look at, or I'll at least say what I'm looking at. But long-term, minimum long-term, when I say it, is 1 year. Because of capital gains. And yeah, John, individual bonds at 5%. I kind of went over that. I don't know that I'd short bonds, Zephin. Shorting bonds is risky in a rising rates environment where you just got PPI and a strong jobs number. I think they're going to continue to raise. I mean, you could get a 50-point raise, and then all of a sudden your bond funds are soaring. Let me see, NLY. I think I've looked at NLY before. Annaly's a REIT. It's got a great dividend. Just know. So here's what you have to know about REITs and dividends and stuff like that. I mean, it hasn't been horrible. You can see. I mean, this is a 4-hour chart. It goes all the way back to March of last year. Hasn't moved that much. But Annaly Capital is famous for their 16% dividend. Just remember, when you take 16% and you pay it out at 16%, the value of your stock should go down. Absolutely should go down because you're not putting any money back into the business whatsoever. Their PE is 4. They're basically taking rent and pulling it out and putting it in. Now, October, $6 to $19. You're trading at 21. You're way above what they say. They announced a preferred dividend. Ooh, they announced a preferred dividend. Let me see. 60 cents per share. Wow. So, big dividend. But here, take a look at a weekly of Annaly, and you'll see, man, it's got this huge gap from 6 to 14. Something happened there. I don't know what it was, but something moved it. But it's not a horrible stock to own. It's just, pays out a 16% dividend. So they with the rising rate, I mean, I won't own Annaly Capital because I think they're a landlord, if I'm not mistaken. Diversified capital manager engages in mortgage finance and corporate middle marketing lending. There was some shadiness, if I remember. But this guy bought more at $5.55 back on June 17th. Bought $1 million worth. I mean, he's the CEO. It's not much for the CEO of a company like this. But $1 million at $5, it's now at 21. I mean, look at that. So, ALB. Albemarle had earnings, didn't they? I think I brought that up yesterday. Yeah, they're up 2%, 279. I said they were going to have a cross up. You can see right here, they're going to have a cross up. They're up a little bit. I think it's a good stock to, 214. Obviously, it was a good stock to get into. I think it's a, $300 stock. Let's see, ALB. Let's see what the 52-week range is. 334 is the 52-week high. Year to date, you're up 29%. You're up 16% in a year. It's its PE is 20. It's expensive, but they're a mining company. It's a good materials company. I like that one. Christian, PPI. PPI came in hot. I kind of did it at the beginning of the show. Morning, Larry. And PPI. So since Jerome Powell came out kind of dovish and said, yeah, we kind of see us raising a couple more times this year, and then we're going to take a look at it. He did say he did not see lowering of rates this year. So he wasn't completely dovish, but he wasn't exactly hawkish either. He said, we'll take what the data gives us. They basically make their decisions 30 to 45 days before the meeting. And then they kind of take their stances. And they can change their stance, up until the meeting. So the governors do kind of take the data in. The data today indicates that inflation is in the market. The data from yesterday indicates that the consumer is stronger than actually thought. So you've got a strong consumer, you've got inflation in the market, you've got markets flying, and you have a Fed that is saying, we're going to keep it a little bit high, but the market's kind of playing poker. And they're saying, hey, we think that the Fed is going to actually reduce rates later this year. So the market's flying. I mean, that's all that's happening. And if you look at SPY, the reality of SPY, when you look at it, we've had all green candles this week. And you've got a green candle again in the morning here. You're coming up. Now it's down, but from yesterday, but it's still a green candle. You opened up at 408. Right now you're at 409. So I don't think if Burry's right, why was he buying into the market? He said sell, but he was buying all last quarter. I think he's pulling a Bill Ackman. I think he's trying to be a bear. I think he's trying to scare everybody. Remember what these guys do. These guys with hedge funds and the headlines and stuff, they will try, and they all have protections and they can all do whatever they want. But when they have certain positions, they, like for instance, Burry. When has Burry been a bull? Name one time he's been a bull. He's been a bear the entire time. Mike Wilson. Mike Wilson has never been a bull. They've missed out on the last 15 years. So I take Burry with a grain of salt, and I look at his actions rather than his words. I just, Burry doesn't want to miss out on stuff. Again, the guy kind of lives like a pauper, so for a billionaire. I think he's got sandals and Hawaiian shirts, and I don't think he leaves his house. The guy's a weird dude, but he's a billionaire. He knows what he's talking about. I just think he's never been on the bull side. So I think that's a little bit disingenuous. Boy, Origin crashed on open. Let me look at. I think that one. I gotta go upload this. Burry knows what he's talking about. I mean, no joke, Burry knows exactly what he's talking about. He was bullish on GameStop, I think, with the momentum of GameStop. I don't think he was bullish on GameStop when they said, hey, we're losing money. We may go bankrupt. I don't think he was bullish on them then. 215, 216. I got two of them today. We're going to add in a transition. DXY, let's see. I'll look at DXY. I don't want calmness. I want some excitement, cheerful. I like that one. 8 seconds. We'll put that one in. Insert ad. Boy, I went over a lot too. DXY? What is DXY? I don't know. I don't even see DXI, Christian. I'll look at Faraday. $67. GLYC. Who's we? Seven, are you trading with James again? It's up 12%. You got confirmation. You're above that 9-day. It's a baby triple bar. Baby bars here. Because you only have $1.50 to $1.59. And $1.52 to $1.58. So it's 7 cents. They're baby bars, but you have triple bar. Oh, dollar strength index. Yeah. Yeah, but you guys know what you're doing. You guys are degenerates, but you know what you're doing. Here, you know what? I'm going to put this. Let me go. I'm going to put this. Let me see. I'm going to put a video that you guys should watch. Specifically, Zephan and James. I want you to send this to James too. Let me see. History. Here. Boom, boom, boom.
Please for the...
I don't subscribe to Kamikaze. We'll put copy. Okay, Zephan, here. You guys should watch that and send that to James. I'll be right back. wonder.
Please, for the love of Michael Burry, can someone explain to me why there are so...
Subscribe. I like that video, by the way. I thought that was a good one. Let's see. We're going to go and... We're going to get this one. Copy. Paste. Notes. And then I hope this one fits in, but I seem to think... ooh. Okay, it fit in. Interesting. I guess I didn't have as many notes as I thought. Only half of them. Zephin, definitely watch that video, by the way. I think it's a great one. I think that guy's got a great channel. I like it. It is from, let me see, 3 months ago. But I subscribe to him. Huh. Yell to me what you think on that one. What am I going to put in here? Let's see. I like TD Ameritrade. I'll tell you, the two that I like in particular are TD Ameritrade and Fidelity. You're using E-Trade, right, Zephin? And remember, if you have an account that's less than $25,000, you're in the PDT kind of thing. So pattern day trading. So you want to be careful with that. I got my Webull account is under 25 grand. So you know what? I'm gonna Bitcoin over 24K. Market update 2/16/23. Okay. I'm gonna say focus on Mara, GBTC, ETHE, Coin, Tesla, ROKU, TWLO, Boyle, LNG, PXD. I like that PXD dividend. APL, Square. See. SEDG. buy. Just publish it now. Publish now. Let's add to Twitter. Let's see what happens. Did Anchor fix their stuff? Nope. Nope. Let's go to... I've never liked E-Trade. I have a friend with E-Trade, and the thing that bothers me, and I don't know this for a fact, and I probably shouldn't ding E-Trade on this one, but she tells me she can't trade fractional shares. Which, Zephin, you probably know. I don't know why you can't trade fractional shares. Every other broker allows you to trade fractional shares. There's no reason not to trade fractional shares. If I had $1,000, how am I diversifying myself by not being able to... I mean, I'd have to buy ETFs. And forget that. TD is good because you get a full integration of Thinkorswim. And dude, you want to be like a hero trader, do Thinkorswim. An Anchor, man? Jesus, you suck. It had it just before. I don't get this. I probably need to become a coder at some point. Brittany bitch is back. By the way, your fellow degenerate James and Zephin are making money, I think, actually. Let's see. In GLYC. And yeah, you guys are up because I started looking at that at about 159. So you guys are doing well in that one, I think. The momentum trade is there. I don't know. Let me see. Yeah, it's traded 2 million shares so far. The 10-day average is 3 million. You're going to go way above that. I mean, it's 10 o'clock and you've traded 3 million already. I don't know what the catalyst is. Let's see. Glycomimetics from $13 to $8. I don't understand. Oh, wait. HC Wainwright and Company slashed the price target for glycomimetics from $13 to $8. HC Wainwright and Company analyst Edward Wright maintained a buy rating. Glycomimetics shares gained 4.60 cents to $1.59 in pre-market trading. So they reduced the price target from 13 to 8. The damn shit goes up 4%. And now it's even flying even more. It's up 17%. You try and tell me that you can time this market and figure it out. I tell you what, I like this ORGN from Sam. It's kind of reminds me of, I forget that company that does organic farming. I like them too. I like the stock. I should say I like the company. I'm not a fan of the stock. We're going to cut this out. X tweet. Close that. Close that. Twitter. See, you guys do well in that stuff. Again, you guys can trade that kind of stuff. You got 30 years of earnings. I'm lucky if I got another 20 years of earnings. VIG. We'll tweet and then close, tweet. And we'll do let's see, the most actives, Palantir, NU, SOXL, Ford, Apple. I think I put Apple in there already. Sierra, DVN. DVN is the most active? Wow. Mara's in there. Amazon. AMC, most active. We can get 2 out of this. 1, 2. Okay. Boom. Okay, and I'm done. Let's see, profile-wise. I didn't know they had a dab emoji. That's wild. I didn't know there was a dab emoji. Let me see. Boom. Published. I don't want to exclude categories. Okay. Anchor is asking me if I want to exclude categories that aren't right for my podcast. Screw you. You want to pay me? Go ahead. Pay me. Is it? The current candle's red. 178. I think it was 179 when I last looked at it. Am I behind? I think my Active Trader Pro is working. By the way, Boyle's down at 606. Loading confirmation. So it's still got it because it's above that green line. My green line is my 9-day, and it's still got confirmation. It's just coming inside the Bollinger Bands. So if you want to get out at 178, I think you probably could get it at 175. It's up to you. But it's not losing confirmation. I mean, if you have your 10%, I kind of, again, Zephin, that video that I sent up there to you, watch it. You know what? I'm going to share this in the private Facebook group. Copy. Morning, Cherry. It's West Coast and Cherry's. Sherry, doesn't today start your trial day? Where's my group thing? There we go. Oh, I went over SVXY, man. Yeah, I'll look at it. Hold on one second. Let me see. I have 8 new members. Mike Howard is inviting a whole bunch of people to the group. Okay. Hold on, I need to write somebody something. No. It's interesting. Let's just say somebody interesting tried to join the group again. Okay. Let's see. I'm getting out of Investopedia. I'll move you over to, UVIXI. Yeah, I completely agree with Zephin. UVIXI's broken. The VIX is broken, I should say. UVIXI is nothing that I would get into trying to say, hey, the VIX is going to come back. We've been used to the VIX being in times of volatility. Ooh, and GLYC did lose its confirmation, Zephin. See, here's your VIXI. It crossed down with a 4% loss. This one, you haven't won in this one since, it looks like this trade, September to October. Ever since October, this has been a losing trade. Now, on the opposite side, SVIXI, which is the complete opposite. It's just an opposite. This has had just a legendary run from 49 all the way up to 20. It got you out here when it dipped down to 62. You got another buy-in at 65. Now, the VIX is up 5% today to 19. SVIXI is up. It's down 1%. UVIXI, which is supposed to be triple levered, is only up 5%. It's an ultra. I don't get it. Remember, it trades on futures. So it's kind of weird. Now, the question is, does the VIX come roaring back? 5% up $1 or 101. It's at 19.24. And the way I track it, by the way, is, and I think you can see it. Let me see. Active Trader Pro. No, you can't. I would need to change my Active Trader here. I'll kind of show you. Well, on Active Trader Pro, if you're on Active Trader Pro, there's a bottom what's called ticker, and you can add the VIX to your ticker. It's .VIX. In fact, I think I may be able to. No, let me see if VIX comes up. Here we go. It's an index, so it's not going to run the strategy tester on it. You can't run the strategy tester on anything other than a symbol, but $VIX. This is the VIX. Now, UVIXI hasn't maintained this. If I go and multi-symbol, we'll go to a multi-symbol look, and we'll go just 2. And we can look up, this is going to be $VIX, and we'll go UVIXI. See how, the charts don't match. Charts don't match at all. This is daily, and it's a 200-day and a 20-day. Now this is, this is January 2022. This is January. Now this has volume attached to it, so there might be a little bit of difference. I can take that out. But see, it just doesn't match. It doesn't match at all. And so I think this ETF has broken. I don't say that it's broken in that you can't trade it. I say that I don't think it's tracking the VIX like it was. You can see back here, look, the beginning, it goes up almost exactly the same. Goes down almost exactly the same. It goes up a little bit there, and it's a little choppy. And right there it's choppy. Here it's choppiness. Here it goes up. That's this move. Now it just goes straight down. And then this one kind of goes up, but you don't see that straight down move. This one has just been straight down. So I think the gap here between the 200-day and this, I think you come back to it. But I mean, that's a big if. So Cleveland Cliffs back above 20. That's what's crazy. Cleveland Cliffs, we're still out. Still hasn't had a cross up. I may buy this because it just crossed up. So remember, UVIXI is the up. So UVIXI is up for the VIX. SVIXI is down. And yeah, Christian's right. I mean, remember, the VIX is kind of a calculation that isn't based in actual. They can move it by just changing some of the pieces of calculation. If we go to Investopedia and we look up VIX. Oh. CBOE VIX. What is the CBO VIX or VVIX? Measures short-term volatility of the S&P 500 indexes. You can watch the video on VIX, understanding VIX. How can investors capitalize on VIX? Related, yeah. The most common and basic ways to add VIX to a portfolio is through exchange-traded ETFs, exchange-traded notes, ETNs. While options and futures are riskier but have larger payoffs, options built in leverage, which means returns are higher but their prices can change from the VIX since they are based on expected forward value. They are traded European style, which means they cannot be exercised before the expiration date. So ETNs, what are exchange-traded notes? ETNs are types of unsecured debt. Yeah, you can trade it. I just don't know. Remember that UVIXI and SVIXI, you're trading based on volatility. There is no actual value that you're buying. It's kind of like Boyle. You're trading on futures. There's no actual value that you're buying. So I'd be super, super careful about some of these things because these things are also fairly new to the market when you're talking about the ETFs that's short and even TQQQ and SQQQ. That's why I typically don't like to hold those things. Is who knows how they're going to perform? TQQQ. You can look at it. Hey, you know what we'll do? We'll go to cnbc.com and I can show you. There's Jim Cramer's meeting. Now, we're going to go QQQ. God, I hate this. All, and we'll compare TQQQ. Oh, come on. Why is that not coming up? God, I hate CNBC's thing. I don't know what the hell's going on. Oh, wait. That's why I'm comparing it. I need to compare it to QQQ. That's why. So 1 year, QQQ is down 14%. TQQQ is down 15%, 56%. If you look at 5 years, TQQQ is up 123%. QQQ is up 96%. That's not 3 times. You look at all, TQQQ is up 4,273%. QQQ is up only 539%. That goes back to 1999. So it's not 3 times. 539 times 3 is 1,500. 4,273 is almost 10 times. So it's just a matter of, but year to date, QQQ is up 47%. QQQ is up 15%. That's, not 3 times. So you just don't know how these things are really going to perform because they're priced on futures and they use options and leverage and things of that sort. So there's not always a clear, oh my God, I should buy, specifically with SVIXY and UVIXY, buying that kind of stuff. Hey, by the way, Zephin, it's back up to 174. Remember when I said, hey, sell at 177, you might be able to buy it back at 175? Yep. You got your chance. And it's still got confirmation above the 9-day, and it's above the VWAP. Now, it was clear here. I mean, that thing was great find on that one. Medical emergency. Shirtless Facebook Live. Broken is a relative term. God, I should have gotten this under 20. I think it's going to cross up. Okay. It's 10:30. I'm going to get out of here. I got to go visit a friend's cat. The one I was talking about, Cleveland Cliffs. Cleveland Cliffs is just coming off a 30% gain from 16 in December. I mean, you could have made 40, I think almost 50%. 16 to 22. But it got you out, and it's button hooking back up. And the MACD is button hooking back up. Now, if you look, I think you could come back up to this 30 route. Now, they got to 30 because of potential world war. Remember what these guys do, iron ore. So if you're going to have a huge defense, here's my take on this one, though. We're going to start spending on infrastructure spending, which is going to drive the price of iron ore up. So at $20.74, I mean, you're not crazy with the valuation here of a PE of 4. A forward PE is 11. But you're going to still make money. Year to date, you're up 27%. 1 year, you're up 4%. You're beating SPY by a good amount on a freaking materials company, on a steel company. January 25th, Exane BN said $21. Morgan Stanley on January 12th said $26. You're trading at 20. So at worst case, you get a 10% move. Go ahead, Zephyr. Hit me. Yeah. I think I did do a video like a year ago on Cleveland Cliffs. And you just listened to some dude on the internet, didn't you? Let me see. Let's go back and watch that video. Your channel. Oh, you were?
But essentially, this is Cleveland Cliffs. If you look at this one, my algorithm makes you 142% over 1,000 candles.
Yep.
If I change this to a shallow 2,000 candles, it runs again. It makes you 89%. Again,
algorithm's good.
This 57 positions, 42% gains. The average gain is 13%. Loss is 16%.
I'm watching the video.
Take a look at this, and I go back to the 1,000 candles. It's even better.
20's been my price.
So you've got 26 possessions, 50% wins. Now the average win over 1,000 candles
15%.
is 15%.
Right.
We just gave you a trigger at $19.40 to buy Cleveland Cliffs. The RSI is kind of high.
This was 5 months ago.
We're seeing this economy kind of move around, and this is a commodities play. I think you could easily.
So let's see, 5 months ago. Let's do a monthly. We'll do a monthly, and we'll zoom in. And we'll do, this is February 1, 2, 3, 4, 5. You were down here, September. At about $19, I said to buy. Look, you could have bought, ridden it all the way up to 21. I mean, it definitely didn't give you an opportunity. Let's see. Let's run it, and we'll go back to the last time it was at 19. Let's see. Where was the 19? There it was. Yeah. Boom. Went down. Went up. Went down. Yeah, I thought it was going back up to this 200 day. But you were just in a slide. But see, and here's the thing, Zephan. The way I kind of point you towards stocks, even if you had held this down to 13, I was not necessarily 100% concerned. I had bought this. I think I bought it actually that day and got out of it. I think I wrote it up to somewhere about like, I may have gotten out with a loss. I don't think I bought it at 1947. I think I bought it at close to 18 in the afternoon or something. But I think I sold it. I may have sold it for a slight loss, but I got out pretty quick because it did lose its confirmation. I just didn't post that video. But the performance chart of our algorithm on 1,000 candles, you're still making 50% versus 20% buy and hold. So overall, even though you've lost on this, you've gained on these big pops. I mean, that 23% right there. You gained on 7% here. Now, the 200 days moving positive. Let's see the last day the 200 day started moving positive. Right here. And you had some pullbacks. You went all the way up to 32. That's the last day that the 200 day was moving positive. So Cleveland Cliffs, for me, the pivot point's 20. And right now it's trading at $20.72. I want to get it under 20. You got this gap down here that goes to 1929. It's been filled. This gap has not been filled. Right at the 200 day at about 15. But my point is on this, I posted that video and it just slid. And probably should have gotten out. I believe I got out probably a day or so after that video was posted. And I actually forgot that I had left it on there. But yeah. Look at the trades on this. The trades have been good. I mean, that was the one loss that it got you out of. The next time it got you in, 5% gain. Got you out with a 5% gain. Then got you back in there, 7% gain. Then it got you back in here with a 23% gain. Now, the last time you bought up in this area was at 21.92, and you have a 0.1% gain. what the only thing that worries me about buying here is that the RSI is at 55 and we're coming off a 23% gain. But I mean, this one was a 46% gain after an 11% gain. I just like $20 for this one. It's got no dividend. And don't cry on losses, man. Losses are a part of life. You're not going to win at everything. Okay. Any questions from anybody? I am out of here. You guys have a great day. I started a Substack, just so you know. It is on the link tree that's down below. Here, let's see. I will go to the link tree, and if you want to, let's see. We're going to share, copy, and then I'm going to paste. Boom. If you go to that link tree, oh, come on and post already. Go to site. You can see I posted the Substack right here. Daily newsletter, Substack. Go and subscribe. I don't know what the hell it is, but my GPS stuff. I know. God, I got too many freaking things on this. These are all my socials, by the way. Twitch I barely use. Instagram I use. That's Spotify. That's Apple. That's Cash App. That's email. That one is Twitter and Facebook. Facebook takes you to the private group. So, Zephin, you're good, man. You think about it, Zephin. Think about how much you've learned since that 5 months ago, that Cleveland Cliffs video, and how many tools, Grinder, how many tools you've learned to actually, better your trading skills. I mean, do you think that GLYC, that you could have traded that thing at the time when you watched that Cleveland Cliffs video? Again, whenever I teach somebody, I always tell them, this sounds like common sense. And by the way, Shopify at 45, I had a little Twitter debate with somebody about Shopify. I think it's coming back down here, 43 to 44. It's going to cover that gap. There's a gap here at 40 to 41. Might cover that gap. But I'm adding more. They made money, 7 cents a share. They're implementing cost controls. They have a new CFO who's smarter about things. It's down 14% today. I always say this, any reaction in the market's an overreaction. I think a lot of people said, oh my God, Gary, you really think that buying Target at 160 was a good buy? It's at 175. It went all the way up here at 179. I do think that buying Target at that price was a good buy. I think you're going to cover at some point in time this gap up here to 211. Target's too good of a store, too good of a story from the company's management to stay down there. Oh, you got me. Is it I think it starts with an A. Well, Micron is one. Micron makes chips. I mean, here, we'll just go over here. No, I don't want to do that. let's go to Taiwan Semi is I mean, they make the chips. This is the one that Buffett just dropped. Shit, it's right on the tip of my tongue, too. It's not Broadcom. Broadcom actually makes the chips. Let's see, semiconductors. Analog devices, advanced micro devices, AVGO. Let's see. Bum, 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 bum. Is it on semiconductor? I forget what it is. Here's your WISA. WISA's at $5. Hey, your GLYC, by the way, is still, I mean, it's crawling, but it's still above that 9-day. In my mind, I think you're putting in a base here between 173 and 177. Let's see. I'll move you over here. 133 to 173 to 177 seems to be a pretty good base. I mean, already today it's traded 4.1 million shares. The net 10-day volume is 3.4 million. Is it Agilent? I don't know. Agile Technologies. What does Agilent do? Let's see. Provides application-focused solutions to life sciences. No. Agilent's healthcare. Qualcomm is they actually make the chips. Qualcomm's in the core portfolio. I like Qualcomm. Okay. It's 15 minutes later. I am out of here, guys. You guys have a great day. Tomorrow is recap day. Let's see. Where are we on SPY? Do we have a green candle on SPY before I go? Because we've had all green candles. We got a green candle on SPY. It's been all green candles this week. So that's kind of interesting. Amazon's under 100. Cleveland Cliffs is continuing to rise. Google's at 97. Google's coming back. Where's Disney? Do I have Disney in our core portfolio? I probably should put Disney. I'm going to put that in the core portfolio. I need to remove something too. Disney I don't track enough though. I'm going to put that in the core portfolio. I'm going to take it out of my not owned. I'm going to put it in there. And I think I'm going to take... I think I'm going to take Pfizer out. Even though Pfizer just... I mean, it's too boring for me. I own it, but I only own a couple $1,000s worth. It's not a lot. I just don't see another one that I don't like. Hey, John, you too. Yeah, I think I'm going to take Pfizer out. If I put one in, I've got to take one out. We'll put this in the not owned. Or no, I'll leave it in my brokerage holdings. Yes. Okay. I took it out. Bum, bum, bum. Bum, 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 bum. You know what? What I want to look at is here. I'm going to leave you guys with this. Let's look at Boyle on the day trader. The 65-minute candle. Because Boyle's trading right at $6. And it has us out. But I am going to set an alert. No. I don't want, let me see, expand. I'm going to get rid of my Bollinger Bands. Bum, 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 bum. There we are. 65-minute. We're going to get rid of that. We're going to highlight this. Create alert at this time. Alert fires. No. Breakthrough. Stop. No. Create alert. We're going to get an EMA when it crosses the 9-day. Even though this is an 8-day EMA, we're going to get an alert when it crosses the 9-day. So I'll post it.